Hey guys, Cameron here with Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I've learned, things that help me build up a sizable rental portfolio in about 2 years and now manage that portfolio. Guys, today I want to talk about my investment portfolio, specifically me. I've had this question a lot about asset allocation, and if you guys know anything about asset allocation, that's just a fancy way of saying your percentage of your portfolio that you dedicate to stocks and bonds and real estate and gold and commodities and fine art and everything else that you can invest in. So it's your whole portfolio makes up your asset allocation. So I've heard a lot, and Chad Carson actually talks about a lot of this in his book, Retire Early with Real Estate. It's a really good book. I'll put a link below or up here to one of the videos I did breaking that down. Very good book, a lot of insight from that. Thanks, Chad, for that. That was extremely helpful. The other, so for me specifically, what do I invest in? Some people think, oh my gosh, he's a real estate guy. He has 100% of his money in real estate. Some people think, hey, why would I put all my money in real estate when I can trade stocks and the stock market's been crazy for so many years. So why would I ever invest in real estate? And you talk to Robert Kiyosaki, gold, Bitcoin, how all that stuff fits into your portfolio. He is big against the stock market. I am not. I think Robert Kiyosaki jumps a little bit too much into the government is going to take us all down type of camp. Like, he doesn't believe in 401ks. I am absolutely 100% believing in 401ks. So with all that being said, how do I invest my portfolio and how did this shake out? So I'm just going to do a fancy little pie graph here. I drew a circle. It took me about 10 times. But here's my portfolio. Boom, Cam's portfolio. Okay, so this is about 66%. Okay, what do you guys think is about 66% of my portfolio? Anybody have a guess? You guessed it, real estate. Real estate makes up about 66%. And I should say really 65 if I'm splitting hairs. 65%. This little sliver I'm going to do is 1%, and then this is going to be 33%. So what do you guys think makes up 33% of my portfolio? Any guesses? Brilliant. Stocks. You're absolutely right. Stocks. And if you guys know anything about stocks or me and stocks, VTSAX, the Vanguard Total Stock Market Admiral Shares Index Fund. It's got like a 0.020304. So that's 4 basis points, 2 basis points, whatever it is. Expense ratio, it tracks the S&P 500. That's the only thing I have in my stocks. 0 bonds, none. I'm an avid proponent of no bonds in your portfolio until you're like 50 years old. So 33% of my portfolio is stocks. 65% is real estate, about. And this is 1%. Do you guys know what I hold in 1% of my portfolio? Any guesses? Crypto, that's right. So I did this video. So crypto is less than 1% of my overall holdings. So if you guys, I'll link to the video up here of my video I did like 4 years ago. Maybe not that long, maybe 3 years ago on crypto. It is still holds true today. I was making those investments back then, and they were very, very small portions of the portfolio. They have grown to be larger portions of the portfolio. They were even less than 1%, and they grew to be 1%. But that's how I break it down. 65% in long-term rentals, 1% in crypto, and about 30, 35, 33% in stocks. Now, why is this? Cameron, why is it, do I have to do 2/3 in real estate, and then 1/3 into stocks, and then a little bit in crypto? So why do I break this down in this regard? Very good question. I'll be honest with you, this proportion is strictly by hapstance. I wish I could tell you I was a genius and came up with this perfect asset allocation or portfolio design that would make you the most money possible. But the truth is, all I did was max out my 401k. And I say max out, I contributed up to the match. I maxed out my HSA every year. I maxed out my Roth IRA. and then bought rental properties with the rest of the money. That's it. So stocks, obviously over the past decade, have done phenomenally, and then real estate has done well as well. So all I did with my real estate holdings is buy good rental properties. Keep buying and buying and buying every year. One year I bought nothing. One year I bought, 14, 15, 16 units, whatever it was. I got the video link up here somewhere, shows my rental purchases over the years. But I wish I could say this is how it shook out. Now, when I look at my portfolio, when I've had people ask me this, I'm thinking, man, what is it? What is there something to this? A third real estate, two-thirds real estate, a third stocks. Now, I think there is something to it, right? I think having a majority of your wealth in real estate means that you're getting that cash flow coming in, right? You're leveraged. So I have leveraged real estate around 70%, 65 to 75% loan to value. And I'm getting that money coming in. And then I have huge tax advantages. Now, I explain this to people all the time, but real estate is fantastic, but it's extremely illiquid. What does that mean, Cameron? That means I can't go down and sell a piece of my rental property. I can't go down and get $500 out of my rental. I can't go down and get $1,000 or $5,000. I have to sell it all, which takes time, which means, when in stocks, I can just go down Monday through Friday and sell $500 or $1,000 or 1, 2, 3, 4, 5, 10 shares or whatever I have Monday through Friday, anytime I want to. So why do I think a mix of real estate and stocks is good? Real estate is leveraged wealth and leveraged returns. So 20, 30, 40, 50, 100. I mean, I've got some rentals that I bought that are infinite returns, right? I did the Burr strategy. If you guys haven't seen that video, it's up here. It's the most popular video I have, but I was able to get all my money back and then some, and then still the asset, as in the rental, was paying me every month. So that's an infinite return. But it's illiquid, and it's not something that is very consistent. Rental income is kind of like this, Whereas stocks, why I like stocks and having a mix in your portfolio of stocks is because stocks are liquid. I can sell, like I said, I can sell any portion of my stocks I want, one share to all of them, Monday through Friday. If the market's doing really good, I want to cash out something, I can do that. And stocks are also, I say guaranteed, I shouldn't say that word, but they are historically going to return you about 10% a year. So it's very stable. You'll have some years like this, you'll have some times like this, but the stock trades and you have prices Monday through Friday. You will see an asset price every single day, Monday through Friday, excluding holidays. So you can see what your portfolio is worth. Rental property, you have no idea what it's worth until it's worth what somebody's willing to pay for it. And I'm recording this still in the 18 months to flatten the curve in the pandemic, and real estate prices are still going out of sight. If something's worth 300, it's going for 350. So it's worth what somebody's willing to pay for it, and you don't know what that is until you actually put it on the market and for sale. The other reason I like the difference between stocks and real estate, having a little bit of both, is I can't do anything to influence my return on my stocks. So stocks are going to return about 10% a year, period. VTSAX is going to return about 10% a year. Some years it will do 20, some years it will do nothing. But it's going to average 10%. I can actually increase my returns with real estate. I can go in and I can blow out the bathroom and update it. I can put in LVP floors. I can do new porcelain tile, showers and whatever. There's so many things I can do, add bathrooms, add bedrooms, to increase the value of my real estate, increase the rental income. I can go and raise rents when somebody comes, when a tenant comes up for renewal. So that's a way you can increase the value of your rental. I cannot do that with a stock. I can't call up Jamie Dimon of Chase and say, dude, you guys really need to increase your overdraft fees. You guys really need to raise your interest rates on your loans. And like it's going to make me any more money at all. It would be totally useless. So for those reasons, I think it's great to have a mix between stocks and real estate. Now, and a little bit of crypto, just because if Bitcoin goes to 1 million or whatever, this could be one of those where it's an asymmetric risk versus reward. I think you should be. I think if me personally, I wouldn't put in more than 5% of my portfolio and see what happens. It could go to zero. That's why I don't think it should be a large part of your investment strategy. Stocks are going to return 10%. Real estate's going to be really highly influenced by what you do, so you can control some of the returns there. Crypto, who the hell knows? Nobody knows. That's my portfolio, guys. That's why I do what I do. I think it's wise to have a mix between stocks and rentals. I think for most of you watching this video, you're probably going to have a higher percentage of your wealth or your net worth in stocks when you start out. That will slowly start tipping. As soon as you buy a rental property or two or three, it's going to quickly change because of the returns that you can make on leveraged real estate. So you'll quickly see that this comes up, and if you guys catch a rising market like we're in now, if you bought 2 or 3 years ago, you really saw that go up. I hope that was helpful. I'm not going to belabor the point. If you guys have any other questions about my portfolio or why I designed it this way or why it came out this way, let me know, and I hope that was helpful. If it was, let me know. If it wasn't, let me know. I'll catch y'all next week. Thanks.